Hyundai reports 51,335 June sales despite production loss of 13,900 units. Hyundai Motor India reported total sales of 51,335 units in June 2026, comprising domestic sales of 39,635 units and exports of 11,700 units. While the headline sales numbers appear softer, the company has clarified that the decline was primarily caused by a temporary production disruption rather than weak customer demand. The disruption occurred after a fire at one of Hyundai's key supplier manufacturing facilities, resulting in a production loss of approximately 13,900 vehicles during the month. Such supply chain disruptions can temporarily affect dispatches even when underlying demand remains healthy. According to the company, the issue was not related to Hyundai's own manufacturing plants but originated at a supplier's facility. This distinction is important because it indicates that the company's production capabilities themselves remain intact. Management responded quickly by sourcing automotive components from alternate supplier locations to minimize the disruption. These contingency measures helped restore production operations across all manufacturing facilities by June 22, limiting the overall impact on business. Hyundai has also stated that production has now completely returned to normal. More importantly, the company expects to recover the lost production volumes during the second quarter of FY27, indicating that the impact is likely to be temporary rather than structural. For investors, this guidance is one of the most significant takeaways from the announcement. Recovering nearly 13,900 lost units over the coming quarter suggests that deferred production could translate into improved dispatches in the months ahead. The update also highlights the importance of supply chain resilience within the automobile industry. Even a single supplier disruption can temporarily affect production schedules, making supplier diversification increasingly important for large automobile manufacturers. Hyundai's ability to identify alternate sourcing locations and restore production within a few weeks demonstrates operational preparedness. Quick recovery reduces the risk of prolonged revenue impact and helps maintain dealer inventory levels. Domestic sales contributed 39,635 units during June, while exports remained strong at 11,700 units. The export business continues to provide geographical diversification and supports Hyundai's manufacturing utilization in India. Although June sales may appear lower compared to normal production capacity, investors should evaluate the numbers in the context of the one-time disruption. Management has already communicated that the production shortfall was caused by an external event rather than a slowdown in market demand. Going forward, the key monitorable will be whether Hyundai successfully recovers the lost production during Q2 as indicated. If achieved, the temporary weakness in June could have only a limited impact on the company's overall quarterly performance. Overall, Hyundai's June update reflects a short-term operational challenge rather than a deterioration in business fundamentals. With production already normalized and management confident of recovering lost volumes during Q2, investors are likely to focus more on execution over the coming months than on the temporary decline in June sales.